Hello, good morning. Streaming live to my massive audience of 0. I don't care, this is for me. Just the illusion that other people may be watching pushes me to do better. I wasn't going to stream today, but I changed my mind last minute because I won't be able to stream Thursday or Friday, which really hurts. It means I have to work through the night. It doesn't matter. My name's Frank. This is Premarket Wake Up. Community is called No More Paper. If you're listening to this in the future, I started this community so people, I want to grow organically a group of people, group of traders who aren't trying to make money any other way, aren't trying to sell strategies or become YouTube stars or whatever. I just want people that want to become traders. I will never charge money for anything. In fact, if everything goes perfectly, this community will one day become private. Not meaning that I'll charge people to enter, but private meaning I'll have a group of people that I feel comfortable with. And that's it. That's all you'll need. At that point, growing bigger would be detrimental to the whole idea. All right, let's get started. First, I want to look at the economic calendar. Some news coming out today. In fact, I think some just got released. No, just the president of the European Commission Bank. I think it's Commission? Europe's Fed. President speaking, which could cause issues. But who knows? ADP employment change did come out at 8:15. I gotta double check these times. This is my favorite calendar, but they recently changed it and it's very glitchy. I'm looking for another one right now. I don't know why they did it, if they thought making it worse would make people buy it more. That seems to be the common strategy of most companies these days. Inject AI into it and people will want it more. I think the opposite is actually true. Anyway, let's take a look at these numbers. They were meant to be growth of 5K, but it actually fell by 32K. That looks like it will change the possibility of a Fed rate cut. Which we're up even higher than we were before. I obviously don't think that the Fed should cut. I think at this point they're just keeping the bubble afloat as long as possible. But it doesn't matter what I think. I may have to soon get out of my short trades and pivot back into some long trades. We'll see. When I take a look at the longer term prices, I'll show some signs that I think show that things are different right now. And I've heard several people state that the Fed and their probability of a rate cut is not the main narrative right now of this current price drive. I think a lot of news outlets are just trying to find something to say about it. But we'll get to that a little later. Let's just check out the rest of the headlines and news. In 40 minutes, we have, it'll be 9:15. Is it 9:15? Must be. Yeah. Somewhere's around there. Industrial production, then we have PMI. Those would be big. If you want my prediction, I think things will come out middle of the road as far as whether the Fed will cut or not. The greatest news we could get for a Fed cut would be unemployment high and inflation low. I don't think that would, I don't know. I don't think that's going to happen. Anyone who goes and buys anything can see that inflation is not, it might be slowing down a little tiny bit, but it's not going anywhere. There's plenty of signs that inflation's going to rise for quite a while. Lots of injections of money into the system. I had hopes that this administration would curb spending, at least curb printing money, but they clearly are not. It's really hard to win an election on that type of thing when most people don't know enough about it to understand that it has a disastrous end. I don't think the Fed has the political will to go against the administration. And I did not look at the numbers. Maybe this administration's an improvement over the last as far as printing money. Doesn't matter. I have to constantly remind myself that I trade the charts. If the signs show price is going up, I buy. If it shows it's going down, I sell. And I may be convincing myself lately that prices need to fall. But I'll take a look at that in a little bit. Headlines. Oh, also tomorrow, PMI at 10, so watch out for that today. Tomorrow, continuing jobless claims, initial jobless claims. Challenger job cuts. And a Fed speech. We'll see. But these job numbers are kind of very interesting. I think the last ADP release was overly good. I don't know how they collect it or if it can be trusted. All right, let's check the headlines. Apple's leadership shift marks a major reset in AI strategy. All right, so one of the most, I'm going to say, fiscally conservative companies in the world and successful companies in the world starting to think that it's going to sit back and see. I guarantee you that's what this article is talking about. It's going to sit back on the AI thing. It's not going to put all of its money into it quite yet. It wants to see further developments. And that is one of the main reasons why I did not include Apple in my recent AI short. Okay, so this is very strange that they put out this article 24 seconds ago. Stock market today. Dow, S&P, NASDAQ futures keep rebound alive as key. Okay, that's not what the headline said. Stock futures edge up. This is the headline here, and then they changed the headline. I think that's disgusting. Stock futures edge up after ADP job data show surprise decline. So prices were edging up long before the ADP job data. That just goes to show what I said earlier about sometimes the news media is just looking for an explanation. They got to say something. They couldn't possibly ever say, I don't know. So therefore they say, market's going up now because the Fed's likely to cut. If that's the case, then why didn't the second those numbers come out, price skyrocket? We'll see. Maybe because it's the overnight, but the immediate reaction was price go down pretty sharply. All right, earnings. Macy's falls after quarter 3 profit beat. AEO and Marvel surge. What's Marvel? Is that the superhero stuff? I didn't know they had their own whatever. Third quarter earnings season is winding down and only a handful of major companies have yet to report results. So far, the quarter 3 earnings season has been solid. As November 21st, 95%, 500 companies have reported results according to FactSet data, and analysts are expecting a 13.4% jump in earnings per share during the third quarter. If that figure holds, it would mark the 4th straight quarter of double-digit earnings growth, an acceleration from the 12% earnings growth rate reported in quarter 2 of this year. Expectations were much lower coming into the quarter, as analysts expected S&P companies to report a 7.9% jump in earnings per share in quarter 3. Retailers such as Macy's, Dollar Tree, American Eagle, and GameStop report this week, providing further insight into how softening consumer sentiment is impacting purchasing decisions as the holiday shopping season ramps up. That's why it's become a popular, I don't know if you could call it cope or excuse as to why there's no strong bear market yet, is you have to wait and see until all the holiday stuff comes through, which would be the next earnings reports. The most recent just shows over the summer and fall, early fall. Marvel does have has its own. I don't know if that's the superhero stuff. Is it like Marvel Oil? Marvel Technology. What do they do? Didn't they used to have a summary of like what the company does? Technology semiconductors. Well, they're up after earnings, it seems. Macy's third quarter results beat Wall Street's low estimates. Company raises 2025 outlook. You mean 2026 outlook? Better than expected third quarter results on Wednesday as weary consumers sought out value and innovation. The department store posted revenue of $4.7 billion, in line with last year, and slightly more than Wall Street's estimates of $4.6 billion. That, alongside adjusted earnings per share of 4 pennies, better than the 14-cent loss analysts were expecting. Okay, it is 2025 outlook. So they did good, but I thought they said it fell. It did. Which is interesting. Maybe, well, let's take a look at it. Is their ticker really just M? Sure is. Oh, because they rose big time before the earnings. Since September, they went from $14 a share up to $21 a share. Yeah, we'll see. I don't really get it. I think we're... So all I can go off is my experience and what I see and what I think. I don't go out shopping. I don't talk to a lot of people about their spending habits. Maybe I should. But we're cutting back on spending a little bit. Not as much as we should in my family. But at least for me, the thought is there to be very careful. Everything is just far too expensive, and don't want to take on debt. And it's getting to that point where you if you want to keep buying all the dumb shit that people buy, you'd have to take on debt. And that would explain why foreclosures are at an all-time high of cars. I don't know about houses, but what do you call that? Repossession of cars is at an all-time high. I wonder about mortgage foreclosures, if that's at an all-time high. So repossessions of cars, that might be more, not so much, I'm sure consumer weakness is part of it, but also just the insane prices of cars. That could be a huge part of that. See what else we got. I got out of like the biotech stuff a while ago. It's all rigged and fixed. I tried following. I mean, I didn't feel like giving it more time. Let me rephrase that. It's not all rigged and fixed. It's just I didn't understand it enough. But it seemed to me like it was rigged and fixed. That brings you back to just following the charts. I used to try to follow the trials, the drug trials, and see when they're released, good or bad, and it's kind of like with companies. Like we just saw with Macy's, the stock price will rise a lot before earnings. And even though earnings beat, it's already above value. So it pulls back. Now it may just be pulling back to support, to rocket higher. It's definitely possible. but I'm not buying it now. What else we have? What's this? Fed data suggests central bank has stopped losing money. The Federal Reserve appears to have finally turned the corner on a 3-year-long string of unprecedented loss-making tied to how it has implemented monetary policy in the wake of the COVID-19 pandemic. Unprecedented. Over recent weeks, data released by the central bank shows that since the start of November, the Fed has started to make enough money again to very slowly start covering an accounting mechanism it uses to capture its losses. Since November 5th, the size of the Fed's so-called deferred asset has gotten smaller, moving from $243 billion to $243.2. It's peanuts. On November 26th. It's a small change, but it's also a clear shift in the long-term trend. Fed watchers do not know how long it will take for the Fed to cover its deferred asset and again return cash to the Treasury, but they suspect that effort will be measured in years. I don't understand this. Let's see if I can make sense of it. Bill Nelson, a former top Fed staffer who is now chief economist for lobbying group, the Bank Policy Institute, said that by tracking the financial performance of the regional Fed banks, the Fed appears to be on track for the combined profits of the 12 reserve banks to be over $2 billion in the current quarter. The Fed's deferred asset tallies up losses that must be covered before the Fed can again return its profits to the Treasury, as it is required to do by law. The Fed funds its operation through income it earns from its bond holdings and from services it provides to the financial sector. Whatever is left over is then handed back to the Treasury. Bond. So this kind of means quantitative easing is coming. I think, if I understand that correctly. That setup has, for most of the Fed's modern history, made it a steady source of income for the rest of the government. But that changed during the pandemic, which ultimately led the Fed to begin to lose money in September 2022. Pandemic bond buying spree. To help stabilize the financial system and provide additional economic stimulus, the Fed bought Treasury and mortgage bonds to depress longer-term borrowed at cost. That more than doubled the size of Fed holdings to a peak of $9 trillion by the summer of 2022. Okay, so if I understand this right, so they're buying these assets, or these bonds, and by buying these bonds back, that puts money into the system. I think I really need to solidify that in my head more. I've been trying to figure out the Fed more and more lately. It's a hard thing to understand. The challenge for the Fed emerged in the same year its bond holdings topped out. Surging inflation pressure caused the Fed to sharply raise rates starting in early 2022. That generating a rising mismatch in the income the Fed was making relative to what it needed to pay out to banks to manage interest rates. Rate cuts have largely halted the Fed's loss making, which means it has been paying out less to banks to maintain the federal funds target rate range, which now stands at between 3.75% and 4%, after hitting between 5.25% and 5.5% in 2023. More rate cuts likely lie ahead for the Fed as officials worry about the state of the job market. In aggregate, it does look like the bleeding stopped at the same time. said Derek Tang. Digging deeper, it does look like it means negative carry has ended, as opposed to idiosyncratic profits from large signerage profits from currency. All right, you're going to need to explain that to me. Matthew Lazzetti, chief U.S. economist at Deutsche Bank, said with market yields beginning to move above IORB, you would expect that the Fed losses stop and turn around. Fed officials have said repeatedly that profits and losses at the central bank have no bearing on its ability to conduct monetary policy. Yeah, okay. But some elected officials have taken aim at its interest-paying powers, arguing that this money created by the central bank to keep short-term rates in desired range is effectively a subsidy to the financial system. Yeah, I don't really understand much of this. I'm going to have to pick this apart. The current job losses and slowing economy, that's not a sentence. Will always reduce rates. Prime lending rate has only seen recession followed both. All right, that has nothing to do with this. This will last exactly 1 month until the Fed starts QE. All right, I'm going to have to unpack that later. Sorry, I don't have an explanation for that. So I had thought they were entering QE, which means putting more money into the system. They've been QT, even though the market's been flying up. But it hasn't had the desired effect. I don't see inflation going down. But that's not really their mandate. Their mandate is whatever political body tells them to do, whatever political pressure tells them to do, and whatever big money tells them to do. Bitcoin hits 2-week high in cautious crypto recovery. Again, this caveat of we're going up, but I don't know. Salesforce stock historically cheap as AI risk takes. See, this is just an ad to me. It looks like an ad. Copper hits fresh record on rising risk of tariff-fueled squeeze. LSEG, what's LSEG? This might be interesting. LSEG will integrate its financial data and analytics into ChatGPT and make OpenAI's enterprise tool available to its employees, it said on Wednesday, deepening its push to embed artificial intelligence across financial markets. It's a bad idea. I don't know what LSEG is. I don't know what they mean by integrate. But I can tell you, it's probably a bad idea. The data and analytics provider will grant ChatGPT users with LSEG credentials access to market data and news content from products like Workspace and financial analytics within the ChatGPT app, starting with a phased rollout from the week of December 8th. I don't know what this means. Maybe someone can explain it. Nope. Nobody else does either. All right, let's check the other Now, you know what? I'm done. I got too much to do this morning. Let's move to prices and charts. And then we're out of here. That's Macy's. Overnight in ES, it rose quite a bit. This is interesting, this dive down. Most of the pullbacks recently have been quicker than the gains. And that's something I noticed yesterday. Yesterday was just in like a crazy whirlwind. It took us 5, 10, like 20, 25 minutes to reach this level here. And then boom, one candle down. And what this doesn't show, and like it was 1 minute we went down. And that same kind of pattern happened all day. And some very strange things were going on with the VIX, which I will show. I will show now, especially the VIX on VIX. Now it's looking a bit more normal, but this was yesterday's start where it just stuck. Even as prices were going up, the VIX on VIX was not going down, even while the regular VIX was going down, which is pretty strange to me. But now it's heading down. But also recently that news, right at 9 a.m., look at that huge increase in the VIX. What does that mean? Oh, we just had a fall. Was there news I missed at 9? Minutes ago. U.S. import-export prices unexpectedly flat in September. What does that mean? Well, I know what that means. What does that mean for markets? So all that scaremongering about tariffs is baloney, is what I read. You would think that would be positive for the markets, but look at the... Oops, I should have changed the charts back. Do you look at that? An insane increase in... So VIX on VIX doesn't have extended traded hours, I guess. So we can't even tell if that's going up right now. But the regular VIX has skyrocketed. I wonder what happened. It can't be about import prices. That is something. All of a sudden, NVIDIA, Palantir, all these, CoreWeave, forget what AVGO is. Broadcom. They're all red now. It went from 1.5% up to 0.25% down. Nvidia. What is going on? I hate to do it, but let's check stock tweets. 90% bullshit, but I don't have money for a Bloomberg terminal. Did Trump tweet? Well, let's see. Guarantee this pump backs up. Yes, because it just keeps pumping up, pumping down, pumping up. Easy low volume raid. Yes, so that's what I saw yesterday. And that kind of made me think that was my sign for possible heading into a bear market. On every other recovery of the past 6 months, year, we did not have this type of large pullbacks, like in intraday pullbacks. Let's look at the ES. And it is significant that we are right now at last month's close. We've been stuck here for several days now. But I kept thinking during Thanksgiving that because of the low volume over the holiday, it was a great time for moneymakers and hedge funds and, you know, the powers that be to push price up to get a great place to sell. Sell into the bear market. It's like all the great the narrative that worked before is not working anymore in the way it should. And until I see a change in the narrative, I'm going to keep continuing to think that we are bearish. Let's see if the Fed Watch tool changed. No, not yet. I don't know how often they review it. Any dip is a buy, don't be stupid. Until it isn't. And how do you know you're not going to have a dip like we did on November 20th? You could have bought when it dipped 100 points and you'd still lose. Here's apparently the reason of that nasty dump. Microsoft lowers AI software sales quota as customers resist newer products. That's why I shorted Microsoft. Anyone could look at that crap and see it's junk. Microsoft is creating a terrible product that nobody wants. Now, this might be, I want to look this up. Of course they don't link the whole freaking article. Let me search it. Subscribe to unlock, of course. I don't think this is the article that's doing this, though. This came out a while ago. But they're calling that the first bearish news on AI for NVIDIA and Microsoft. That's how it starts. Companies are pulling back to develop their own AIs, which kind of means they don't have the capital to spend on it anymore. So they're either going to slowly develop it in-house or just slowly let it go on the back burner a little bit until it becomes viable enough to make profits on it. This is probably going to crush NVIDIA. Also, in other news, you saw the Apple thing. They're going to just sit back and watch type of news. That on top of OpenAI begging for money anywhere they can, with companies turning away from OpenAI. Now, don't be fooled by this. This could just be a hiccup. Let's take a look at now, how did this article come out 2 hours ago, but it's those selling Google because Microsoft is lowering AI sales are definitely not seeing the bigger picture. Why does that's not an argument. When someone says something bearish about AI stocks, you always get this counter argument. You don't see the bigger picture. They're not a lot of the bearish news on AI is they're not criticizing the bigger picture. They're criticizing valuations. One minute ago. I think it must be. Circuit breaker levels. Geez, 63.51. What are you looking at? What? This is hilarious. I gotta say, I know exactly what happened. Someone masturbated, which has angered the market and the economy. You know exactly who you are. You did this. Shame, shame. Random Wednesday morning, Microsoft had to say some BS. I really got to understand options more if I want to take my trading to the next level. All right, just an update. I am looking to buy this dip. I constantly look for ways to hedge my current shorts I mean, it's already to the point where, yeah, it hurts when I lose a lot of money, but I'm essentially kind of breaking even at this point if my stops hit on my shorts. But it just sucks because then I have to figure out again when I want to get back in if that happens. I'm gonna have to do all that math again. Well, let's take a quick look at the rest of the markets. So we got the ES. That's the other thing about yesterday. It was really weird. It's at the open, the Nasdaq rose almost immediately. Let's try to get a better view on that. And at the same time, the Russell was falling quite hard. And to a lesser extent the Dow. Which is just very, very, very strange. And I mentioned, maybe to myself, I mentioned at some point yesterday that the excuse for that type of thing was the market broadening out, the people divesting in one company and putting it into another one. I don't know. I think it was market manipulation, if you ask me. I did a lot of bad trades yesterday. I broke my rule and traded in the morning. I don't usually trade between 9:30 and 10. And I paid for it. And I cobbled a lot of it back, but still hurting. I don't know, we'll see. Anyway, I do have to go, but let's check out gold. What's gold's doing? Gold fell at that news as well. Oil did also. It might just be a glitch in the markets. Again, you're going to have a lot of those if you incorporate AI into the markets. Bitcoin fell pretty hard, but is now recovering significantly. Yep, I gotta go. That's it. That's all I have for today. Let's one last look at the dollar. Dollar fell pretty good yesterday and is continuing to fall right now, except for the last hour. All right, that's it. That's all I got. Goodbye, good luck. I won't be around Thursday or Friday, probably.